Today on Fear and Greed, the local share market hits a record high as Chemist Warehouse joins the bourse. The federal independents let it be known that whoever wins the next election will have to work hard for their support, and a bunch of earnings results from Treasury Wines and Temple & Webster to IAG and Pro Medicus. Plus, Apple TV will finally be allowed on Android devices, and Donald Trump is set to meet Vladimir Putin. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Friday, the 14th of February, 2025. I'm Michael Thompson, and happy Valentine's Day, Sean Aylmer.
Right back at you, Michael. Happy Valentine's Day.
What a way to start the day. The main story this morning, Sean, the local share market hit a record high yesterday, touching 8,575 points as investors grow confident that the Reserve Bank of Australia will cut interest rates next week.
It has been a cracking start to the year with the S&P ASX 200 up 5% since the 31st of December. Really, it's been all about gold stocks. The big banks, led by Commonwealth Bank and consumer discretionary companies, some we've loved for a long time. JB Hi-Fi has done well this year. Some that we haven't liked for a while, but we do like more now. Domino's being an example there. The interest rate decision next week is a big one. Pretty much everyone expects the first cut in rates since November 2020. Now, we've had plenty of rises since then, but no cuts. The fact that the Reserve Bank isn't saying anything to correct market speculation is seen as reason to have plenty of confidence about a rate cut on Tuesday. It isn't a done deal. Higher inflation in the US overnight highlights how price rises in economies are tricky things to get hold of. But investors are increasingly confident of a rate cut. Quality stocks are booming. So yesterday it was more about the big miners on the back of iron ore prices, but generally, the banks, the really good retailers, Wesfarmers, they've done really well.
Sean, can I ask you something there? When you mentioned that the RBA isn't really saying anything to kind of correct the market speculation about a cut on the way, what do you mean by that in terms of kind of through the various speeches and things that the representatives of the bank make at all different times throughout the year? Is it that kind of thing?
It is. Maybe 10 years ago, 20 years ago, there used to be a couple of journalists around the place who seemed to have the ear of the Reserve Bank. And this is modern communications, really. Yeah. One was a guy called Alan Mitchell from the Fin Review. There was a Ross Gittins from the Sydney Morning Herald. There's a guy from the Daily Telegraph. And it was funny sometimes, just before the Tuesday meeting on the Monday, they'd write a column saying, well, everyone thinks that the Reserve Bank's going to cut or not cut. We don't think so. And the whole market would move on it. And they'd sort of somehow, I don't know how they did it, but they just knew. Nowadays, it's much more transparent. And I think the point is, if the market was wrong, the Reserve Bank would somehow get out to the market that it's wrong. You're pricing in the wrong information. And the market has pretty much priced in a rate cut next Tuesday.
Because otherwise there would be a potentially significant correction next Tuesday when a decision is announced and it was the other way to what the market was predicting.
That's right. So if there's no rate cut next week, you will see things like the share market for the Aussie dollar will rise or appreciate against other currencies, and it just creates volatility. Now, that's not necessarily a bad thing, but the Reserve Bank does like calm markets.
Yeah, okay. Now, Sean, the story of the day yesterday was the trading of the combined Sigma Healthcare Chemist Warehouse business. It was day one for the new company, which is a very kind of significant day. Considering it's worth $32 billion and its share price jumped 5%, that is not a bad first day.
Yeah, if you bought Sigma shares in early September, we knew about the proposed deal, but it had all these regulatory hurdles to get through. This is early September. You'd be up more than 250%. So you put $1,000 in, you'd have $2,500. Not bad. I reckon the happiest person is co-founder and CEO Mario Verrocchi. He today is worth $5 billion. Not bad. Bunch of franchisees. There's about 104 franchisees, I think. So people who have taken out a franchise on Chemist Warehouse, they're actually getting effectively paid out in stock. So they're going to have shares worth between 5 million and 25 million. So you think of those retailers who have been working 7 days a week for years and years in Chemist Warehouse stores. They're going to be very rich this morning. Good on them. We talk about Sigma taking over Chemist Warehouse. Not really. It's the other way around. it's what the market calls a reverse takeover. So it's where the company being taken over really has control, and that's what's happening in this instance. Anyway, great first day for the new Sigma Healthcare, which includes Chemist Warehouse. Good luck to them.
Yeah, it's a fantastic story. Now, Sean, Labor is going to have a tough time of it dealing with crossbenchers if there is a minority government after the federal election. And this was particularly demonstrated yesterday when we had independent Zali Steggall confronting Special Minister of State Don Farrell when he was holding a press conference yesterday. These things, it is so uncomfortable when it happens, but God, it's entertaining.
It is. It doesn't happen that often that a politician interrupts another politician when they're giving a press conference, but it does occasionally. The issue yesterday was an overhaul of federal election laws. So Labor and Libs combined, or Labor and the Coalition combined, to shut out the independents in voting for changes to election laws that limit the ability of individuals to bankroll candidates. So you think of Clive Palmer or Simon Holmes à Court's Climate 200 initiative. That spent about $6 million last election, and ultimately 6 Teal candidates who received a bunch of that money were elected. Now, I think the limit now is $50,000 for Climate 200 per individual. So it's really cutting funding from some of these guys. Meanwhile, under the new legislation, the major parties will get about $140 million in public money. So that's why the Teals are so upset. Zali Steggall has sort of emerged as the de facto leader of the independents, or the Teals.
Yep.
She confronted Don Farrell over the changes yesterday when he was giving a press conference. Effectively, she said it was BS, and that she used the term BS. What it does show, and this is why I think it's particularly interesting, we've got a federal election coming up. In all likelihood, it will be a minority government run by Anthony Albanese or Peter Dutton. Just the fact that the coalition needs 21 seats to capture Labor suggests that it probably will be a Labor minority government. They have to deal with Zali Steggall's and all the independents. And unless they take this seriously, they are in all sorts. So it's a really interesting and relevant intervention by Zali Steggall on Farrell yesterday.
It's a fascinating story. And really, one of those public interventions pushes it into the headlines in a way that it wouldn't normally be.
We probably wouldn't have covered that press conference this morning if Zali Steggall hadn't made such a thing of it.
Yeah, not a bad strategy. All right, Sean, we've got plenty more to cover. We've got results galore, Treasury Wine Estates. We've got, who else are we talking about? We're talking about Temple and Webster, one of your favourites, really, isn't it?
Yeah.
Plenty more coming. We'll be back in a moment with the rest of the day's business news. Sean, Treasury Wine Estates has dumped plans to sell its low-cost brands, think Wolf Blass, Lindemans, Yellow Glen and Blossom Hill, because it can't get a high enough price.
That's right. They've been trying to offload, Treasury's been trying to offload the brand since August last year, but they're just not finding a buyer that suits their needs. Treasury, of course, owns Penfolds. That's its main brand. It's been a pretty tough time for the winemaker. It's downgraded its full-year profit, even though the 6 months to the end of December came in much higher than a year earlier. Penfolds remains the highlight. Now, over that last 6 months, it was able to export again to China because the tariffs had come off. As a result, Penfolds did really well. But mid-tier and commercial wine brands are struggling. The under $10 bottle, there's a glut of that wine. And younger consumers are turning to ready-to-drink spirits. That's where the growth is. So the $10 bottle of wine is really struggling, and they're just not selling anywhere near as much. As a result, Treasury is going to end up stuck with these, and maybe I'm being a bit unfair saying stuck. It's going to hold on to that portfolio. Investors weren't happy. Treasury share price was down 6% yesterday.
That's the first time you haven't referred to the under $10 bottle of wine as my kind of wine.
And I held back. I know,
I could see it actually hurt you not to do that. Sean, renovators have spurred strong sales at Temple and Webster, with the online retailer reporting higher demand for sofas, for beds, for bathroom fixtures, lots of stuff.
Revenue and profit were both higher and above expectations. The group's share price jumped 14%. Now, the company sells more than 200,000 products, operating a platform that allows suppliers to ship directly to customers. While the must-haves are doing well, The want-to-haves, things like art, mirrors, they're not selling so well. Sales in the last half were helped by a growing number of new customers and plenty of people returning for purchases. The retailer intends to increase its home brand range of bathroom fixtures, with its home improvement sector basically being the fastest segment for it. As a result, the share price jumped yesterday.
IAG's share price tumbled 13% yesterday, Sean, even though the insurer almost doubled its net profit, thanks really to benign weather conditions.
Okay, this is a great example of companies needing to meet or beat expectations. Remember, we talk about what happens isn't so much about the profit they made, it's about what they say about the future. And that's what really drives the share price. So it was actually a good 6 months for the insurer, for the 6 months to the end of December. Benign weather means it keeps a lid on costs. Strong investment market. So, you pay a premium, they invest that money. Good return on that for IAG. Haven't had to pay out too much because it's benign weather. Good 6 months. However, they said that there's a slowdown in premium growth, and that actually really hurts revenue. Now, we might be upset for the shareholders. The good news for us mortals, we pay the premiums. So a slowdown in premium growth means that, the jump in premiums for car insurance or house insurance isn't going to be as much as it has been the past couple of years. So bad news for shareholders, good news for customers. IAG, of course, houses a suite of brands, including NRMA and CGU. You know what I like about companies IAG? When you actually look at the results and you try and get behind the jargon, what they're telling us is actually the cost of your car insurance isn't going to jump as much next year.
Yeah, it's the story within the result, right? Like it's just, it is putting it down to a very human level, something that we can all understand.
Exactly.
Now, do the same for us on this one, Sean. Pro Medicus, which is a company that we've talked a lot about in the past, haven't we? Because it's had a spectacular run. It reported record revenue and profit yesterday, but its share price fell just over 3%.
So this is a priced to perfection stock. And the result was just a touch below expectations. So whereas IAG was talking about the future, that's what caused the sell-off, Pro Medicus, just the result wasn't quite there. And as a result, its share price sold off a little bit. Initially, it went up, the share price, then fell. It's still up about 160% over the past year. It is literally up 1,000% in the past 5 years, right? This has been an incredible stock. And it was a good result, more cash, new contracts in the US, better profit margins. However, when it comes to Pro Medicus, it is a super expensive stock. So investors, basically, the share price reflects what investors think future earnings will be. And without getting in the technical terms, it's called a PE ratio. And a company like Commonwealth Bank, which we all know, it's trading at 27 times. So just think of that as a benchmark. Great company, 27 times. Tech stocks always do a lot better. So WiseTech Global, market darling, it's trading at about 150 times future earnings. Pro Medicus is trading at 250 times future earnings. So even if you don't know what any of that meant in a technical sense, right? The fact that Commonwealth Bank is 27 times, WiseTech, which is a market darling, and tech stocks there's reasons that they're a lot higher, 150, Pro Medicus, 250 times earnings. It is expensive.
And that is why today's interview is a must listen, Sean, because it is part of our series of interviews that we're doing with our partners and friends at AusBiz, which is Australia's leading provider of live and on-demand video of the latest news in Australian business, markets, economy and startups. You can sign up for free at ausbiz.com.au. But the interview today is with Dr. Sam Hupert, who is the co-founder and chief executive of Pro Medicus. And the interview starts with that exact question, basically. So stick around for that one. It's coming up after the show. Sean, plenty more here. A stack of profits, as you would expect in earnings season. We'll race through them fairly quickly. Some of the highlights include good news for ASX Limited, which is the company that houses the local share market. It makes money in part by enticing more companies to list on the exchange. And boss Helen Lofthouse said that was happening, pointing obviously to Chemist Warehouse, Sigma. The volatility in markets also helps ASX Limited, and it announced a 10% higher pre-tax profit for the 6 months to the end of December. Its share price closed up 5%.
Former REA Chief Executive Greg Ellis will take the top job at its main competitor, Domain. while the company looks for a full-time boss. Ellis was in charge of REA from about 2008 to 2014. He then went to MYOB and ran that business. That came as the company said earnings had risen sharply as more people visited the site. Its share price jumped 7% yesterday.
Origin Energy posted a bigger than expected increase in core profit for the first half as earnings from its gas business more than offset weaker results from generating and selling electricity. It also said it was losing more money than expected at its Octopus Energy business in the UK. Its share price fell 1%.
Glass bottle and can manufacturer Aurora, been on the show Aurora, we like them. They'll cut glass capacity in Australia and redirect some of the production to the United Arab Emirates, resulting in some job losses locally. As it contends with a drop in commercial beer and wine sales, the news sent Aurora's share price down about 6%. Notwithstanding, it actually increased its half-year profit.
So you'd say share price pain for a glass company.
Nice.
Pretty proud of that one. The country's biggest gold producer, Northern Star, said earnings were up nearly 60% on the back of a higher price of gold. The group also lifted its dividend and its share price rose slightly.
And finally, diversified miner South32 posted a near seven-fold increase in profit in the first half, thanks to higher copper and aluminium output. Profit from the half year went from $53 million US to $360 million US. Not bad. The company also upped its dividend and its share price jumped 3.5%.
Goodness me, we covered some territory there.
We did. Well done.
Sure. just back and forth. It's like tennis, wasn't it? This is good news, Sean, if you've got an Android device. Apple has finally released its streaming platform on rival Android devices, and it's going to let customers pay for subscriptions on Google Play accounts as regulatory pressure mounts to open up its really, really very tightly controlled ecosystem.
Oh, those Android users, you can watch Severance and Ted Lasso, those great shows.
Enjoy.
The Apple TV app and streaming service Apple TV Plus will be available on Samsung phones and tablets and Google Pixels or any device that supports Android 10 or later, according to a report in The Australian. Apple says it's built the app from the ground up to deliver Android users a familiar and intuitive interface. Do you reckon that the developers of Apple were just a bit irritated that they had to build an app in an Android sphere?
Oh, yeah. Yeah, you wouldn't put much love into the design. You're like, fine. It's very begrudging.
Mind you, it is Apple, yeah. The world's most valuable company has been under pressure to open up its ecosystem, including allowing payments outside its own system in Australia, Britain and Europe. The ACCC, the competition watchdog locally, has been investigating the market power of Apple and other tech titans recently. Anyway, this kind of somewhat alleviates that.
Turning to international news now, Sean, President Donald Trump said Washington and Moscow will begin negotiations immediately on ending the war in Ukraine after speaking with his Russian counterpart, Vladimir Putin.
The call suggests a dramatic turnaround in the US-Russia relationship amid signs Washington would reduce its support for Ukraine after almost 3 years of war. Trump wrote on his Truth Social platform that he and Putin had agreed to work together very closely, expressing confidence that the talks would be successful and vowing no more lives should be lost. He said the two leaders had also agreed to visit each other's nations. Now, they will meet in Saudi Arabia, apparently. The call between the two lasted about 90 minutes. Moscow, it's the first time that Washington and Moscow have spoken at a high level since Russia invaded Ukraine. Trump spoke to Putin before he then called Vladimir Zelensky, Ukraine's president. Not as clear how that conversation went, but I think that would be a bit tougher for Donald Trump.
Oh, I imagine so. Finally, Sean, inflation, the scourge of Western economies, may not be beaten in the US, with prices again rising at more than a 3% pace.
It supports the case for the Federal Reserve to slow down any interest rate cuts. It'll be closely monitored by the local Reserve Bank, I dare say, when they meet next week.
I suspect you might be right, Sean. Up next, a Fear and Greed daily interview, as we mentioned, with the boss of Pro Medicus. Stick around for that. It is coming up in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. And at midday, a new episode of Ask Fear and Greed. Thank you very much, Sean.
Thank you, Michael.
It is Friday, the 13th of February, 2025. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.